Hey traders, a very warm welcome to you. So in this short video series, I'm going to talk about the big topic of trading psychology. Now I've picked 5 kind of topics that I know I dealt with myself as a trader and deal with myself as a trader. I know other traders deal with on a constant basis. So this is going to dig into these specific topics. Now, by no means is this a really deep dive into trading psychology as a whole. This is a massive subject, and this is one of the most important aspects of trading. So we're going to cover lots more on trading psychology over the next couple of weeks, next couple of months. So make sure you subscribe to see more of this kind of content. But for now, let's talk about these 5 big issues here. So number 1, over-analysis. We're going to talk about over-analysis. Number 2, we're going to talk about how the outcome is random, and that's going to be actually for each trade. Each trade is random. We'll talk about that. Accepting the risk of the trade, pulling the trigger, whether you're too early or too late. That's often a very common one, and remaining focused. So just some different ideas that we're going to talk about here. So over-analysis. What do I mean by over-analysis? Let me find my red pen from my desk here. Okay, over-analysis. Now you might think, okay, the more analysis I do to my trade or to the stock or to the market, the better my decision is going to be. Now, it's my experience and experience I know of many other traders, and possibly you as well. You may look at some of your previous trades and the way you've made your decisions, and perhaps you are taking too much information in. So we live in an age now where we have so much information, just so much. Do you know, I started 2001, and okay, we're not talking like back in the 1980s here, but even then the information wasn't as easily readily available. Internet was only just getting going. Well, it was going for a while, but you know what I mean, information wasn't as much as it really is now. Now we've got so much stuff. We've got, just think about what you can do even with your charting package. You can have any time frame you want. You can have any indicator you want on there, any setting on that indicator. So think of how many permutations of actual data you could display on just on your charts. And that's not even going into fundamental analysis, not even going into social signals, that's not even going into broker recommendations. You've just got an unlimited amount. So the danger you've got with this is that you can always find a good bullish argument for a trade, and you can always find a good bearish argument for a trade. So you don't have to drown out everything, but you have to have a process and stick to it. So what do I mean by that? I basically mean, if your decision process, let me simplify it into 3 boxes. And this is kind of the way that I approach trading, and I know that some other people approach trading, and I think it's a good way of doing it. And obviously you can pick and choose this, adjust it to suit you, or discard it as you see fit. And ultimately, in fact, let's make that number 1, shall we? Let me get my cloth here, otherwise we'll have red marker all over the place. All right, so this is number 1. So ultimately, the way that trading kind of works for me is this. So I have 3 decision making processes, or 3 things that I need to see to make the trade. And this is just an example. It could be 2, it could be 4, but let's just do that. And what do I mean by that? So I basically mean, if I am, let's say I am taking a trade on the opening drive of the DAX. Let's talk about a day trade for an example here. And I want to get on board some momentum. It's a strategy that I've employed before. I know the setup, I know how it works. I want to get involved in that, but I have some criteria and some filters that I need to put in place before I take the trade. So they may be, okay, what are we like on a daily chart? So on a daily chart, are we above a certain level? Are we trending in a direction, or are we gapping down below? Just some parameter. We're not going to go into depth about the actual strategy here because it's going to vary, but I'll have something that I need to see to move to the next phase. And then I might say, okay, where are we on compared to the overnight session? Are we gapping? Do we have a big range? Do we have something that maybe would indicate some momentum from the open? And then I would say, yes, we do. And the third thing might be, do I see initial strength from the opening candle or whatever I'm deciding? And I go, yes, I do. Then I move into the discretionary phase, which is then saying, okay, pull the trigger. Now, let me just put an example here for you, another example. The reason I'm doing this is that I'm not now saying what are the overall brokers, what's the overall sentiment on the DAX. I don't care. You know, what are the major constituents doing? I don't care. What is the Fibonacci on a monthly chart doing? I don't care. You know, you see what I'm saying? I could put all sorts of parameters into that, but at some point I have to say I don't care. I've made my structure. In this case, it's very technical based, but I've made my kind of pathway to take the trade, and I need to stick with it. At no point do I start adding in, you know, a 4 or a 5, and then just over analyzing and taking more information in. That's fine to do that, but you do that when you're trade planning scenario, when you're trade planning in the market's closed and you're planning all your setups and your strategies, and you say, actually, do you know what, this works very well, but it needs an extra filter in, and needs an extra filter in between here and here, and that might be, or whatever it may be. You know, you can put anything in. Maybe it's an indicator, maybe it's some sort of fundamental indicator, some sort of analysis, whatever it may be. But then you put it in and then you add it. The point is, you don't have loads of them because you're very, very rarely going to get them all to line up, and you don't add more on the fly. If we just look at this example here quickly, talking about, say, let's say a technical setup. Let's say, for example, we've had earnings on a stock, okay, and we're looking to take a swing trade on a stock. The market has come down. I'm just going to be very roughly with this pen here, but you kind of get the idea. So it's come down over a few days. It's tried to push back up. It's now broken through that low, and then it's pushed back up. And our setup, for whatever reason, rightly or wrongly, I'm not saying this is the right setup, but let's just say our setup here is to see the market put in a low, to see the market at number 1, puts the low in here. Number 2 is that it breaks through that low, and then number 3, it pushes back up through the low, and we take the trade anywhere between kind of there and there. And that's our discretionary area. So we have, you know, box number 1, that's our decision-making process. Number 2 has to be in play, yes. And then number 3, finally, we have to push back up over that low, and then I come into the trade area where I'm going to take the trade. The interesting thing here is that that's kind of the decision you've made. You've made the decision. Perhaps there's something as well additional to that. We'll put it as 0, but you obviously have a 1 to 4 there. That the market, the price has moved down on earnings that were perhaps unexpectedly bad, or it's moved. You know, this is more than 10% in a few days, or whatever it may be. You know, the point is not to say to say the filters are right or wrong. The point is to say you're not over analyzing the information that you've got, because you just end up being paralyzed and not being able to do anything at all. You take all the information in, you think, oh, this is bullish, no, this is bearish, yeah, but this says this, oh, but that says that, but my Fibonacci says, my stochastics say that, yeah, but the broker sentiment says this, and people say the news is bad on this, and everyone's, forget it. Have your rules, stick to it. Don't overanalyze things. Have your process. If your process isn't working over a period of time, by all means adjust it, but never adjust it on the fly. Never get too much information and you can't make a clear decision, and just accept the risk and push forward.